Let's do this.
Okay, guys. So it's 10 a.m. and if I'm not mistaken, it's Wednesday, the 20th of May 2015. Welcome to this webinar broadcast hosted by our FX. This morning's guest star legendary trader is TraderSZ. I guess you're all familiar with him from Twitter and other social media outlets. He's going to be presenting his live market analysis for us this morning. There's definitely something in the water in Birmingham. So without further ado, I'll hand it over and let him take over.
Can everyone hear me okay? Is that yes? Or
Yeah, all
can't see the
yours.
chat.
Go for it.
Okay, so basically, I'll start off how I trade. Well, I trade pure price action. I trade concepts I've learned from ICT, Inner Circle Trader. I'm sure a lot of you might have heard of him. He's on Twitter, and that's what I do. So when I trade, right, a few things that I always look out for when I trade. I look at where the money is resting at. So the way I see the market is, it's a game of stop hunting. I forget all the fundamentals, CPI, this, whatever. That doesn't bother me. Those news events for me are just liquidity injections to get my trade from A to B quicker. That's all I see as. So I never fear the news. So like I said, I mark out areas where I think the money is resting at. So that comes in the form of stops. I try to get in sync with the higher time frame, because when you're in sync with the higher time frame, you're not fighting the tide. So there's bigger pips out there when you trade in sync. I do take trades against the trend as well, shorter term though. When I trade, I look for the best risk to reward setups. Like when I'm looking for a trade, I rarely take less than 1-to-1. It's mainly 2-to-1, 3-to-1 minimum. Longevity, I mean, you last longer in the game if you look for the big setups. Well, it's worked for me anyway. I mean, certain trades I'll get 10-to-1, so I can afford to take 10 losers in a row. But if your methodology strategy is good enough, then you shouldn't really be taking that many losses in a row. So you last longer in the game. It's just high probability and it's less stress. You know, when you're taking quite a few losses, but when you take one decent trade that just wipes out all those losses in one go, it's good for your psychology. I find it easier like that anyway. So with that, I never fear a loss then. Because psychology, I mean, no matter how good you are, if your mindset is not there, then it affects your trading a lot. Anyways, let me get down to what I do. So I always base my trades off the dollar index. Now, I mainly trade the majors. I do trade the exotics every now and again as well, but it's mainly the majors. So for me, whatever the dollar is doing, that will be reflected in the majors for me. So if I think the dollar is going up, obviously, I'll be shorting the majors. Now, I'll go through I think the best way to explain it, what I do is going through some examples of how I've taken previous trades, and then going forward what I'm looking for and how I'm gonna take trades going forward. So let me show you an example of a trade I took recently, and then maybe it'll make more sense. So for example, I took this dollar CAD trade this week. I've been cleaning up on the dollar CAD, just taking intraday trades non-stop. I started off, first of all, I did a webinar on, I think it was Sunday, and this is where the dollar index was resting at. So if you look at the H1 on the dollar index made a low, rallied up, and made a higher low. It did not break this low here. Now, if I look at the euro dollar made a high at the same time that dollar index initially made that first low, and then a higher high. Now, obviously, euro is the most strongly correlated to the dollar index. Now, this shouldn't be happening. This higher high shouldn't be happening, because if it's closely correlated, then you know the euro should be making a lower high. So I look at where the euro dollar has come into. Now it's coming to an area, something I call a block. Well, I don't call it. ICT calls it a block, an order block. An order block is basically where those that move the markets, they put in heavy orders. So, for example, if you look at this bullish candle here, this could be considered a block. Why? Because this is where they started to sell. I mean, we've got blocks here as well, but this is the bullish candle where they started to sell, or this candle here. So I'm looking for areas where the big players bought or sold off, so initiated their buying and selling from, because that's where we're likely to get the big reactions from. So I had this area marked out, and then I was watching the euro make this higher high while the dollar index was up respecting that. No, dollar index was making a high low, but the euro wasn't making a lower high. So this put me on alert for a short. So when this broke down, I said in my webinar that because we've got this cracking correlation, expect a reversal but this wouldn't be enough. So what I would be looking for was confirmation in price. That confirmation in price comes from a breaking structure. Here we had a rally up and a break in even if it's 5-15 minute structure, that's enough for me. So when London opens, I only take my trades in during London Open and New York Open when I'm trading the majors, because that's when, you know, there's liquidity in the markets, there's volatility into the markets. Because if I'm taking it outside those sessions, then there's not much movement happening. Yeah, every now and again you do get that the odd movement, but there's not much happening. So when I'm can you hear me now? Is it sorted? Okay, so where was I? So when I start building up my trade idea, so this puts me on alert. The dollar could rally now, because I follow what the dollar does. The dollar will dictate to me where the rest of the markets are going. Maybe some of the markets may lag a bit, but overall the others do follow what the dollar is doing. So if the dollar is going up, the others will go down. So this for me isn't enough. I need to know that for sure it's going up, so I wait for the confirmation. When I get a PA like this, structure starting to break to the upside, I start it puts me on alert for setups then. So I look for blocks on the lower time frames then. So come Monday morning we had we had this order block form here. Market started to rally up, break to the upside. It rallied up. It's breaking structure now. That's it. That's done deal for me now. And ideally, I'm looking for price to fill in gaps in the market. Now, when I mean gaps, I mean thin movements like this. This is a concept I learned of Chris Lawley. IST does teach it, but I've learned it in detail with Chris Lawley. He teaches that when you see thin moves like this in the market, it leaves little pores, little gaps in the market that we can't see on a chart, but they are there. And banks usually like to fill them in, whatever commercial purposes or whatever the reason is. They always get filled in. I mean, even if you look at your charts on like a H1 chart or whatever, when you see clean moves like this, they always get filled in. So a clean move here fills in, and where they take on a larger time frame scale, it may take a little while, but usually on the H1 they get filled quite easily. If you look at this, large move down and then fill in. Everywhere you see a thin move, they'll get filled in. So I use these areas as targets. So when I'm in this trade here, I'm thinking, okay, this is the first target area here, yeah? And if it wants to carry on, then I'll wait for price to tell me. Then we've got this area here. Also, I mark out areas of stops. When I see double tops and double bottoms, I think of them as traps, because everyone and their dog, when they see a double top, they're shorting it, or when they see a double bottom, they're longing it. It's typical. I mean, I'm not saying they don't work, but when you get clean double tops and double bottoms like this, that's usually a trap. So if you follow me on Twitter, you'll see me talk about or post charts like this. I mean, I mark that out. That's a liquidity pool for me, a stop rate. So those that are short the market, if you think about it, if you're short the market and you're seeing this massive breakdown, the next logical area to place your stop is here, isn't it? Well, a lot of people may do place it here or here. So what's the market going to do? It's going to rally and it's going to take out that stop, and then it's going to head for the next area of stops. Where's the next area of stops resting? So on my chart, I have all my stop areas marked out, inefficient moves marked out, and I just keep targeting them. Is that clear so far? Hope so. Now, ICT uses a model called the buy model and sell model. A buy model is basically, so we start off with the selling here. All this movement down is an engineering to move it all the way up to take out this. So what the market is, it sucks in the shorts. I mean, this is where the selling starts. So people start selling, 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 and then all this was a move to long it to take out these guys. So it's a game of taking money off people the way I see it. That's how everyone makes money. If I'm making money, someone's losing money. So what's the way to do it? Get everybody into the market one way, and then take them out. And when you notice when the market takes them out, it doesn't waste time. It rips through. So it doesn't give time for the shorts to get out, especially if you're in a larger time frame scale. So I hope that's clear. So that's how I approach it. So if I'm looking to long this, ideally I look for, you can get buy models. Start from here, smaller one, and then we've got a larger one here, and then we've got another larger one here, and then we could possibly have another larger one here. Now, if you remember the concept talked about where if the dollar is making a low here and then a lower low, then the euro should be making a high and then a lower high. Now that same concept can be applied here as well at a key high time frame level. Right now on the dollar index, we are at a key higher time frame level. It's an order block here, and if you look at this is what I would class as an order block. So this is where they sold off from. The big selling was happening here. So if he comes here again, it's going to sell off. There's a good chance it's going to sell off again. And look what he did. When he sold off here, he came back here, sold off. It's come back here again. Now it could hold or it could carry on going up. I don't know. So when I trade, I rarely ever leave limit orders in, because I don't know if a level is going to hold or not. I need price to tell me it's going to hold, and the way it tells me is if price breaks down. So price has come here, and I want to see a fast move up into a level I'm looking to sell at. The reason why I like a fast move up is because when we get a fast move up, we often get quick retracements back down, and the fast moves usually sucks people in. So if you see this, moving up and up really fast, people start chasing that, and that I see as a trap. So I like to see a fast movement up and then a breakdown. So now it's broken down. I'm not yet confident on longing yet because I haven't got my confirmation on my other pairs just yet. I'll go through what I look for as confirmation. So we're on the dollar index now. So here we made a high, right? We're getting the same cracking correlation again. Is a crack. If this holds, if you look at this high here, it's on the 5th of the 5th, and if you look at this high, it's today. So if you look at the euro, it's the 5th of the 5th. It made a low, and today it made a lower low. It broke through. Now, if you're selling here, where the stop's going to be resting here and here, I'll go through exactly how I would have traded this as well. I think the best, like I said, the best way is if I explain my trades and you can understand it that way. But if you look at the dollar index, it hasn't made a higher high. Why is not euro not respecting that? So we can see this as a divergence now. So that's now put me on an alert for a big move that could possibly unfold. I obviously, like I said, I need my confirmation first. It's just happened now. So if you look at this, the divergence there. So where's it gone? So going forward, I'd look at the euro because I won't trade the dollar index. I'll trade the euro. So going forward, I mean, for me to take this trade, I'll need a break in this structure, so I'll usually look for a break in here. See this area here, and then I'll wait for a block to form. So we've got an order block here. This could be considered an order block. If price rallies from here, this is the candle they bought in. So when price rallies and it comes back down, the large institution, they don't buy in one go. They buy in blocks. So they'll buy the first block here, and then they'll take the price up, then they'll bring it back down, and then they'll buy another block, another block of orders in. Now, once I know that they're in the market, you can't miss it, because the way ICT teaches is that they leave footprints. Their footprints is a large rally off a key higher time frame level. So once I get that breaking structure I'm looking for, then I'll wait for the retracement back down, and then I'll get on board, because then that's my confirmation that they're in the market. I can't blindly buy this. I don't know if they're gonna I don't know if price is gonna carry on going down or hold. I see it as gambling. Other traders out there might be better, and they could just buy it and it works. But for me, I have to wait for that confirmation. Now, if I've already got a trade based idea, now this is based around higher time frame premise, because if you look on the daily, obviously we'll be going down, 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 down. Now, look at the daily. I think we could possibly be in for a trend reversal. Right now, we've come to a key higher time frame level. We've taken our key stops here. For those that were long, I mean, these stops got taken and these stops got taken. Even though it's a few pips only, I would have preferred if it was a larger one, but even if it's a couple of ticks, it works for me. So ideally, I am still bullish overall this euro. So for me to get on board, like I said, I'll have to wait for a rally up, dip back down into the block, and then I'll buy it up. Similar. So when I came into this week, this is how I played it. So I've got my premise in mind. I said I want to break down in the euro or a break up in the dollar index, which I got here. So going into the euro. So come Monday morning, like I said, I only trade the London session or New York session, because that's where the most volatile markets is. So I seen this block formed. This was the bearish candle before the move up, right? So this is where they were buying. At the same time, I have my euro dollar chart up, and I want to see the same thing happening. If I've got the confluence of the same thing happening, it's green light for me. So at the same time, we had this euro dollar here, right, coming to this block, because this is the bullish block. See, they start selling when market's moving up. They don't start selling because they're the one that control the markets. So they'll be selling within this candle, and this is where the selling happened. So if price is gonna go up again, they're taking the market up. They start selling again. So this is where I'm gonna jump on board, because now they've tipped their hand to me. Now I can get on board, because if I'm going to sell up here, I don't know how high they can take it. I can take a guess by using Fibonacci extensions or key support levels, but for me that's not enough. I need confirmation. I've had my confirmation now by a breakdown. We've come in into London, and we've taken out some shorter term stops. If I'm entering a trade, I'd like to see a stop rate, a fast move up, and then I'll enter. Because if you enter, then if you're right, you'll get on the positive side of your spread straight away, and your stops can be really tight. So if I'm entering this trade, right, when I took this trade, I had a really tight stop. And when I trade, I always go with really tight stops. That's the best way, I reckon. So this is the block I had focused. Now you can zoom in and refine down the blocks, but this is the block I had focused. I also use Fibonacci a lot, so I had this marked out here, and I'm usually buying within the 62 to 79%. So I don't think I used this. So use this one. So we've got this block here I've marked out, and it's a confluence with the initial block here. A lot of people say this is like supply and demand trading. It looks similar, but it's not. When you understand order blocks, you'll find that there's a big difference between supply and demand and this type of trading. So come Monday morning, I mean, it reacted off there, but I didn't sell here. Actually, I didn't sell here. It could have. I like to wait for like a stop rate, a little breakdown in London, and then up. So we form another block. So during London Open, this is where they start selling, and we break down, and we rally up, and the price comes back to this block here. So when I'm shorting here, I'm having a stop just above here, a 9-tick stop. I'm aiming for overall. I'm aiming for the next stop area. Where's the market trying to go? Because I'm holding it now. I'm not trading the short term. I'm holding it for the longer term trades. I'm aiming for initially this block here. This can be considered a block because it's the bearish candle before the big move up. So they did do buying here. So I'm looking for price and I can take profit here. And if I still think it's gonna go down, I'll re-enter because I'm not bothered if market's gonna reverse. I'm not bothered about catching the top or not. All I want to know here is the top in. Once it's in, then I'll milk the market intraday, various setups, and I'll have my higher time frame bias intact, and I'll look for where the stops are. So when market's there, and I think the market's gonna go down, I'll have my areas marked out. And I think to myself, okay, where are they trying to take the market? Where's the money resting? So I'll have this marked out initially, and then I'll mark out all possible areas where stops will be resting. Because put yourself in the position of, I always try to put myself in the position of those that are long in the market, retail traders, us retail traders, and those weekends. So if I'm long here, where am I going to place my stop loss? I'll probably place it here. If I'm around here, I probably would have had it here. If that breaks down, those that have wider stops, they'll have their stops here. Wider stops, they'll have their stops here. So one by one, these stops are getting taken. And this is the sell model completion, which is the opposite of the buy, obviously. So this is where the move starts. Engineer the market up, get everyone long, and then boom, take the market down, take them all out. And then obviously you'll have these stops resting here. So if they want to take it even lower, they'll just take out these stops. So for me, it's just a game of stop hunting. So the way I started to take these trades was, so this was Monday morning, right? I took this trade, and then it became New York session. So I look at this as a block. ICT calls it a breaker block or a mitigation block. Now we obviously won't go into detail what a breaker is, what a mitigation is. It'd take too long. So, but you can study them. It's for free anyway. You can study these methods. So when you, so here, now, what they do, right, is they'll manipulate the market up, right? They'll take it up, get people trade with buy stops and sell stops. So, I mean, people with buy stops, they probably have a buy stop here. Oh, look, they've triggered in now. And then they push it back down. So if you miss the sell in London, New York always gives an opportunity a lot of the time. So when they bought here, they're still holding the longs as the market's dropping. So what they do is the area they bought from here, they'll take the market back up there to unload their longs because their longs are in a loss now. So they're unloading their longs, and here they start adding more shorts again into the market. So what I'll do is if I miss a New York, London Open setup, as long as the daily bias is intact, like my trend for the day at least, if I say, okay, price here, and I still think the market's going to go down, I'll have this marked up prior, and I'll wait for price to get there. And this is where I'll start selling at. And literally, I'll have my stop just above there, and add a few ticks to your spread, especially when shorting it. But in this situation, I would have had it here as well. This probably would have been the logical place because they bought it here as well. But either way, we've got an overlapping of these blocks here, the way I see it anyway. So and this comes straight to the tick. When market respects a block, it doesn't waste time. You either know you're right or wrong straight away. Because if this is the block they're holding, they shouldn't really pierce it too much because they don't want the market going too high. They want to immediately unload their longs from here that are in a loss, and then add more heavier shorts and continue the market down. So just say we'll take minimum area to sell at, the minimum, bare minimum, and you have your stop loss just above here. That's a 13 tick stop loss, and you're holding for the average daily range. Now if you're holding for the bigger move, expecting at least this or ultimately this area, that's 353 ticks for a 13 pip stop loss. So you can see how you can get the risk to reward. And when the trade takes off, it's easier to hold a trade. It's only when you're initially in a trade, a lot of people find it difficult, or might start reversing here. But if you have your higher time frame premise in mind, expecting this sell model to unfold, then you shouldn't have a problem. And with experience, you'll just get used to holding positions bigger for longer. And with my trading, I usually go for the big swing trades, and they pay off huge. The payoffs are really huge, especially with a tight stop loss. And that's the way I found to grow my equity really quick. So that's that. And then Then there's multiple opportunities to get on board here. I mean, those that know ICT method will know. Same thing during London Open. It happens. I'll just give you another example. So London Open. This is so the next day. So we've sold off here, still expecting. So during that day, we came to this block, we bounced, and we came down, and we took out this stop here. We've still got the inefficient move. Remember when I spoke about these inefficient moves, these clean moves? We've still got this here. I've still got stops resting here. Clean lows like this and clean lows like this, they're getting taken. So I would never. My bias would still be bearish when I'm here, still expecting this move to get taken. Hang on. Sorry. Still expecting these to get taken because that's where the money is resting at. So if they want to reverse the market upwards, what they'll do first is they'll come down, take the stops, and then shift the market up. So when I say I'm playing it just for the stop rate, this is what I mean. I'm just taking it for the stop rate. So let's go forward into how you would have played the other setups. So now we're in this scenario here, right? This was the candle they bought off for that big move up, right? So they're still holding longs here and they've taken the market down. Now remember when I talked about they're still holding those longs and then they'll take it back up there to mitigate that loss. Now you can see this well. Oh, it's a support area and then has resistance here. Ultimately, it is support and resistance, you know. But this is how I refine down my support and resistance. This is how I know the high probability that this is going to hold, and this is my exact entry level. Because with order blocks, you can get in with exact price, not just leave a limit order in a zone area. It's an exact price you're targeting, and that's what gives you this tight stop loss. So if I go forward, so here, so we're in this candle here. This is where they bought out. This is the order block. Now usually you'll expect this to hold if it's still an uptrend, but it broke through. So what it does is it reverses its role. So instead of buying into it now they're using it to sell into. So here they've come up and they've sold. I don't know if this is going to hold, so I wait for my confirmation. And looking at the time of day, it's late in the night. I'm not interested in taking a trade here, so I will wait for London Open. And they will usually always push it up to London Open. That's where they trade. So here, London Opens, we've got a block here, right? This is where they started the selling, Japan, whatever, and then they sold off again. So if you miss this, you can get up on it in a retracement. So you get in right in this retracement, and you sell it. And literally, if you get in here, you only need a stop above here or above here. Tight stops. Usually, I don't look to take more than 20-25 tick stop. If it's above 30, then I'm really thinking about my trade. And then if you miss that, then I think there was intraday opportunities as well to get on board. So today's opportunity, this is how you would have gone on board. It's still expecting these lows to get taken, because another thing I look at is exact price behavior. So if price comes to a support level, right, and starts grinding around there or consolidating around there, that puts me on alert. Like, why is it doing that? If it's really gonna hold, why is it not just like reacting right off it? Usually for me, that means that it's gonna push through it. It's just building up momentum, coiling up for another push through. So we took out these stops yesterday, and I thought, okay, maybe this could hold, right? It's an order block, and it's an area where I could possibly buy, and it's taking out the stops. So why not reverse? But I'm looking at price, right, and I'm thinking, okay, why is this grinding here? It's not really taking off. So that just puts me on alert that, you know what, they want to take out the next level, and the next level is right down here. So it was late in the day when it wasn't going anywhere. So when London opens, what they're going to do first, they're going to raid that stop area. So you come into the market, you mark out your blocks. Here's your little block. Price comes into it. You wait for your time as well for London to open. I usually start trading 6-7 UK time. I start looking for the trade at 6, but usually I start trading after 7. Sometimes before 7, but really rarely. And then this was a trade I could have taken just before 7. Sometimes you do get in late, but here you get in here, and you keep a stop loss just above there. Or if you want to keep a higher stop loss, you can keep a 30 pip stop loss. That's the way ICT teaches it, is price shouldn't really move 30 pips above your entry. If it does, then you're usually wrong. So you could enter there, playing for that stop loss only, and then taking your profit and then just rallied up. Now, like I said, we've got massive divergence coming in currently in price action right now. So I mean, I think this could possibly be the high in the dollar and then resumption down. Look what they've done. They've left this in the dollar. They've left this clean lows in, and look how fast prices moved up. They're ripping out the stops. So those that are short, they've been having an easy ride, but now they've been taken out. A lot of the weak hands have been taken out, and they've left massive inefficiencies in the market, clean moves, which will get filled usually. Most of the time they will get filled. So my first sign is this divergence we've got. Now I'm going to be waiting for that breakdown in price. I'm not comfortable long in the euro here and short in the dollar. I need my price. Like I said, if I miss the top, it's okay. As long as I've got my confirmation the top's in place, I can just milk the market for the remainder. And like we know, I mean, if dollar continues breaking down, then we could be in for a massive, massive dollar sell-off. Like I said, we've been selling it here. And I've been playing this move for the past couple of months. The exact same concepts, the same buy model, stop rate, filling in of inefficient move all the way from down here. If you look on my Twitter, you'll see me posting a high here and riding this whole thing down and longing the euro from the bottom upwards. Yeah, I know a lot of this probably might not make a lot of sense, but I'm just explaining it in the view that you understand ICT concepts because they do take a while to learn. One second. Are there any questions? Well,
Yeah, we've got some
so going forward with
coming in, so I'll just transfer them to you, side. It's someone's asking about USD JPY.
okay,
You can take a look at that pair.
okay, dollar yen. Let me just get a clean chart. It's got a lot of mess on here. Dollar yen's a bit of a funny pair. I mean, it's mainly correlated towards the equities, isn't it? But yeah, same process. Now I've had this monthly block marked out on this dollar yen. Looking at a monthly level, right? Let's look at the monthly. This is an order block. Okay? It doesn't matter. Price is fractal. Whether it's a 5-minute chart, 15-minute chart, monthly, weekly, it doesn't matter to me. Just on the high time frame, it just take longer. That's all. So with here, this is where they sold massive sell-off. And look what we've had. Inefficient move. Now obviously saying, oh well, it's been happened over years, and yeah, that's fine. But once the sell-off does start, I'll know what I'm targeting. I'm targeting the filling in of these moves. So because there was selling happening within this, I'm happy to start shorting it. I mean, you could say, well, we could get a buy model completion here. Yeah, we can. But at the same time, we are in a block. So if on the lower time frame, if a sell opportunity does happen, then we could sell into it. For example, look at the sell-offs we've had here. Every time it's coming to this block, that's 500-600 pip sell-off. That's 400. You can keep playing it, and that's how I've been playing this market. Now look what we've had here. We've had a clean and efficient move, right? So get rid of this block. It's just the red is just too bright for me. I've been trying to sell this market for a while, but every time I sell it, I mean, it's just been in a hardcore range. Like you can see, for a couple of months now, it's been in this range. Now it does put me in alert now. Look where we've come up to. We've come up to what? An order block here. I'm just gonna mark that here. You can see that? We have come into an order block. Possibly it could be a sell-off. And look what's happening at the same time. We've got the dollar index coming into an area. So when we've got all these major pairs coming into areas for sell-off, that just puts me on alert. Hang on. Can you explain again how you know where the big players have bought and sold these? The way I know where the big players have bought and sold is I look for the candle prior to a sell-off. So we've got this, right? The bullish candle prior to a sell-off, or the bearish candle prior to a rally. So it's quite logical if you think about it. I mean, it's going up and up and up, and then we had a big sell-off. So where's the selling happening? It's happening within the bullish candle, isn't it? They're selling while price is going up. They're not going to be selling while price is going down. Who's pushing the price down? They're the ones that move the markets. They're big enough to move the markets. So while this is going up, they're starting to sell. They're probably starting to sell earlier on, but this is where the big selling takes effect. So this is where you know selling's happening. So if price goes up into it again, you're alerted. Look at it. Look at when it comes. Now mark it out from the bodies of the candles because the bodies is where the volume happens, the open and closes. These are just wicks, thin. Now obviously technically the block does start from here, but I'll have it marked out at the body and the base of the block. And I'll go down to my lower time frame for an entry. So 5:15 minute will give me my entry. I can't just blindly short it here. I don't know if it's gonna hold. So go to 5:15 minute chart. If I get that 5:15 minute breakdown, that's it. That's my confirmation that this is going down. I'll sell it. Now no one's saying you gotta hold it for hundreds of pips. Even if you hold for 20, 30, 40 pips consistently with a tight stop, you can make money. And there's plenty, I'm playing it the same again and again and again. This block here, if you go refine it down, it's a 4-hour block. Sold off, sold off. So right now we've come to a block here right now. I'm using this block. You could use this block as well, but I like this because it's quite meaty. It's got more volume in it. And we've had a rally in. See, I like a fast movement up and a breakdown, and I would have sold it here. The base of this block here. I use Fibonacci. I'll draw to 62 to 79% retracement. That's how ICT teaches it. So I'll have that marked out, and I'll have this marked out prior to old price, before price getting there. And now I've had my reaction off it and a little breakdown. I'm happy to sell it here. This is where I sold it. I would have sold it. I haven't been looking at this chart. And there's 18, 19 ticks, and the stop loss should be just above here then. If you're correct, that this is the high, then price shouldn't go above there. But that's why you can afford to have a tight stop loss. I literally will have a 5-tick stop loss, and let's put my ad spread, and that's how I play. Obviously, the way I see it is a wider stop loss, just to get used to it. But once you get used to it, once you start trading these concepts, it's with any concept really. Once you get used to it, you can fine tune it to suit yourself because you've seen these certain patterns happen over and over again. You know exactly, okay, I can afford to have a tighter stop loss here, or I need a wider stop loss there. So here, this example, a minimum area to sell at would be the 62%. So there's 5 ticks there, add my spread, and this would have been a 7-tick stop loss for me. It's a 18-pip move. That's over 2 times the amount you risked. If you're happy taking that. But right now I'm not in any position yet. We've got FOMC today, so although I don't fear the news, you just gotta be careful because with certain news events you get these nasty spikes up and down. If I get a clear setup ahead of FOMC, I'll take it. I don't have a problem in that. Does that answer your question on pound and dollar yen? Now pound dollar, I think we could be setting up for a long now. Look at this fractal here. We look at where has price come up to. This was the, if you look on a daily basis, right? This is a bullish candle before a sell-off, wasn't it? So they sold in here, they're selling in here. Then price rallied up, so it didn't respect it. But now it's come back down to it. So what comes to mind is a role reversal now. Instead of using it to sell into, they're using it to buy into now. And look at prices respecting it. If we go into the lower time frames, we can refine down the blocks. This is a 4-hour block here. Within that daily mitigation block, instead of an order block, this would be called a mitigation block because it mitigates its role. So 4-hour block here. It's respected that nicely. It's respected that yesterday, right? Within the daily. So I like to place my trades based off the weekly, daily, 4-hour, monthly time frames. And then I only use the lower time frames for my entries. Because if you're in sync with the overall big moves and everything, you got to be in sync. You got to know what's happening on the bigger time frames. You can't be stuck in 5-minute time frame noise. Nothing wrong with scalping, don't get me wrong, but this is how I trade. I don't like looking just at the 5-15 minute. I need to look at the bigger time frames, and the only reason I go into the lower is for my entries. I'm looking for little nuances. So right now, what happened? We came into the block here, and we had a nice rally up. That's perfect. We formed an order block, right? And we formed this little consolidation here. We've left a move of inefficiency, right? Formed a little consolidation here. What does price do? Comes down to the tick of this block. This is how powerful these blocks are, to the tick. It's not, yeah, it looks like a supply and demand zone, but like I said, I'm not going to argue the differences, but it's come to the tick. If you draw Fibonacci, swing high to swing low, the 62 to 79 is the area I want to get in at. So as soon as price touches this, for me, this is a buy, right? And it rallies up. Now, like I said, sometimes I'm not confident if this is going to hold or not. So if it's formed this, I'm looking for that breakout. Once I get that breakout out of this, that's it, game. I'm going to go balls deep long this. and I'll wait for the retracement back down, and I'm gonna long it. And I think this is going up to 1.6, minimum 158.33, and then if that gets taken out, then we're going to 1.6. We're looking for these. So then it's going to be a game of stop hunting again. Now, when price came down here, right, it took out these stops, right, but it didn't take out these stops. I'm thinking, if price is going to come that close to it, why not just take out these stops as well? But they leave it for a reason, to build more confidence in the shorts, because they can't keep letting the market rally, and everybody's getting an easy ride. They need to take out the weak hands at the same time. So if you're long in this, right, a lot of people, what they do is they keep their stops below the daily bars, don't they? So if you're long in this market, right, and you're down here, you either keep your stop loss below this daily, or on some sort of structure level on the 4-hour lower time frames, right? Look what the market does. It takes out those stops. And where does it take them? And it comes to a key level where they previously sold at, and now they're buying at. Now this just put me on alert now. I think we've got a massive swing trade coming in, and we've got possibly another big wave of selling in the dollar. But like I said, confirmation first. Like here, this was my confirmation to go long the cable. You can see this. This was within this daily block here. So if you mark out this daily block here, this is where the selling was happening at, right? Then they rallied up and they broke through that. Look how similar the fractals are. So we come here and we broke through that, and where did we test? We came back to that level. So what did price do? Price consolidated here and it rallied up. When that rally happened, that was it. That's my green light that the big institutional buyers are behind it. Then I start hunting my longs because I know now the low's in. And on the higher time frame, I'm targeting where? I'm targeting minimum this, but ideally I'm targeting this, because this is a strong resistance level, and where massive stops will be resting. So those that are short here, they're either keeping their stops above here. So if you're trading this on, say this was a 5 minute, you shorted here, naturally keep your stops above the previous swing high, won't you? Where they're going for? They're gunning those stops. They've taken out those stops, and now they're trying to take out these stops now, I reckon. So, like I said, similar fractal to this, build up and a breakout. We've got a bit of a build up. Now I want my breakout. I want it to come down into this block here, and then I'm looking to play it where? Minimum. Well, I'll personally be playing it here, but when you learn this concept, you can take profits earlier, whatever you want to do. We've got a clean, inefficient move here as well. So if you really want to take this, I mean, from current prices, that's 126 pips away. This is going to get filled. I've seen it so many times that I've got the confidence to say this is going to get filled. Could be wrong, but you know, yeah. And then here, this is where the stops are resting. And then boom. Now I actually sort of sold this as well. A similar thing when I explained about the euro dollar and the dollar index divergence. You know, if the dollar index is gonna go up, cable will go down. Every now and again on a short-term level, like we've got fundamentals, it goes the opposite way. But in general, it will follow it. Now, typical, it comes down. Price makes a high, comes down. People get trapped short here. Let me explain this, then I'll answer that question. It breaks down and then fast rally up. Now, when people are seeing this fast move, first of all, people that are short here, let me go on to low time frame. It's easier to explain now. Okay. Okay, so here, remember when I spoke about double tops and double bottom being clean? You can see this is a 5 minute double top, right? So you could have sold this, that's fine. But then what happened here? A massive rally up. Look how fast and thin this move is. I remember I spoke about these thin moves getting filled. The only purpose for this market going up is to raid these stops. Where does it come into? The H1 block. Whenever I see this is a green light to short it, because you know this is gonna smash down and take out the longs that have been here. There's a lot of people probably got caught long here, thinking, okay, we smash down here and we're long, and then we keep our target area in mind here. I posted a chart on my Twitter going for these lows here. They got taken. So it's a similar set, and they're all similar no matter what pair it is. Price is price, really. So let me read this question. I'm sorry. How can I understand that trend is over in higher time frame, and also want to know when I understand that it's correction trend reverse? It doesn't really, for me, it doesn't matter if the trend is over or not. What does it matter? All you want to be, your job is here to make pips, right? So I don't want to seek a top and bottom. That's why I'm not bothered about catching the top or bottom. But when price comes to these keys, so for example, when I was long here, when price came to here, I'm gonna be wary now. Price could possibly reverse. It's come to the area where they're selling at. And if you look at it, it did sell off here, it did hold. We got a 350 pip sell off. So when I look for prices to get to key levels and to key blocks, and I usually take profit there, or I'll trim some down and see if it's going to break through or reverse. And that's how I look to take profit. Now, to know like trend reverses, I mean, you can look at stuff. I look at stuff like the way I see it is commitment of traders report. I look at where the commercials are positioned, seasonal tendencies, stuff like that, or on the higher time frame, basically coming to a higher time frame key support level. So if you trade in the 5 minute, right, 5 minute chart, you're gonna take a trade based off when it comes to key support level on a 5 minute chart. So it's the same. Price is fractal. I'll wait for prices come down into a weekly block here. So when price does that, I mean, when those that are short here, this was the area to stop. So if this was a 5 minute time frame and I'm shorting this, I'm aiming for this. Now, obviously, it's not easy holding for months for a 2,500 pip move, but at least you know where price is trying to target. So you know where the order flow of the market is. The big players, what are they trying to do to the market? So that's how I would trade it. The big picture would be the shorting. When I was shorting here, market is moving down, targeting where this, and as soon as they take these stops out, immediately rally up. And at the same time, the other currency majors should be respecting that as well. When you find all the pairs respecting that same thing, then it's a green light, and then you just gotta pick which pair you want to take. I like to trade the majors obviously because they're cleaner. My favorite is actually the dollar CAD. There's certain nuances in the dollar CAD that I really like. I don't know, dollar CAD sometimes is just a pair that can, go straight from the dollar index a bit, but it's a one pair that when it comes to rating stops, I've never found a pair that's better. That's just my personal thing. I love trading the dollar CAD. But yeah, that's for a different story. But does that answer your question? Because I don't know if it's a correction, but I will trade. I will trade from block to block or from filling in, just taking out stops. So even if I have no directional bias here, right? I don't know what's going on here. When I see this price action here, in this red box, price come off a key high time frame level, of course, break down, and an immediate rally up like this. That is a green light for me to sell, because I know, right? This is where the stops are resting. They're gonna take it low. We've got this inefficient move here to fill in, and these stops resting there. Why are they selling the market up? A clean move like that really holds. When people get clean moves like that, they're getting excited. Yeah, let's go long now. I don't want to miss out. And then what does the market do? Immediately takes them out. It doesn't waste time. You take them out here. This is without directional bias. Just this price fractal here. That's enough for me to take it short. You just had the higher time frame bias helps because you're in sync with the tide. So that's how I play it. Does that answer your question? It's probably not clear, but I hope that answers. Any other questions? Though I can't see the Q&A. Doesn't let me see the Q&A.
Yeah. All right.
Oh, now I can. Sorry, now I can.
Can you see it? Yeah, all right.
Okay,
there's a ton of questions, and you're going to be here the rest of the week.
How do I take out the thing? Questions, because it's just showing me like a little box.
Okay, so next to the X, there's a little box with an arrow pointing upwards. You click that, and it enlarges the Q&A.
Oh, now I've got it. Oh, sorry. Now I can answer the questions. Okay. Referring to EU, this tradesman, would you look for EU to set up? Yeah. So when I'm looking for a trade, if I've ever taken a trade like the euro or pound or dollar CAD, I want the dollar index to set up at the same time. That's my confluence. That's my confirmation as well. So there's many ways of skinning the cat. But you want everything lining up in your favor. So if the dollar index is coming in for a long, and the euro dollar is looking for a short at the same time, and so are the pound and dollar CAD, then that's a green light. That's a no-brainer. I smack that day, all day long. Tight stop, smacking as trade. That's it. So I'm always, I've got a few videos on YouTube I've just been doing because I've just discovered Camtasia, and you'll see me in the live trade example where I've got the dollar index up and I've got whatever pair I'm trading, and most of the time I'm just watching the dollar index most of the day because that will tell me where everything else is going. Obviously, you've got some pairs that dollar CAD will just take off whatever, no matter what's happening, but in general, this is what I'm looking for. Hope that answers your question. When you get confirmation on a break of market structure for dollar and euro, is that the time we start drawing the sell on? You don't necessarily have to draw the sell and buy models. Like, yeah, I mean, you can do that. It's a good idea to mark out everything from beforehand. But I'll draw out the next areas is interested going into, and I'm looking to take my trade. So if you get that break in market structure, that confirmation, and then obviously once the dollar index sets up as well as the euro, then that says green light for me. Just take it. And mark out area. I always mark out areas of stops. So right now on this chart, it's been messy right now, but let's just go into a cleaner chart. Dollar index, right? When this starts breaking down, you're going to be targeting the lows now. The stops are going to be resting there. I have no doubt in my mind. I think this is going here. When this starts breaking down, so from now, yeah, this is where I start making my principal sell model up from. So this is the beginning. Then we've got, a little bit of consolidation here. If this is the top, possibly, it could be. And then if this breaks down now, that's it. For me, it's green light now. We're going all the way down, at least to here, minimum. Because this here to there can be considered a sell model, a smaller sell model. Then this could be considered the biggest sell model. Ultimately targeting these lows here. Clean lows do not hold, rarely hold. So when I'm ready to take this, I'll be holding the euro till this gets taken out, or this area, the double top on the euro is left. Does that make sense? So do you look for an exact? So I could have this marked out here, and then the rest of the sell model here. Okay. Do you look for an exact USD order block trade at the same time? Yeah, I do. How can I understand that a trend is over? Okay. Do you look at the dollar index for trades that are in? No. So another thing I do. So say for example you're trading the Euro GBP, right? Based off the Euro GBP, it'll tell me which pair to take for that day. I mean, where's the strength at? Is it in the euro or is it in the for pound? So I think this is the trade I took. There's a video of me and doing this trade. It's on my YouTube, right? I had this marked out, right? Clean double top here and clean stops here. I was looking for euro longs just based off that. So it came to the morning. I go, okay, what are they going to do? They're going to do two things. They're either going to hold the pound and let the euro rally, or the pound's going to be they're both going to be weak and pound's going to be really weak. But when I was looking at the setups, both were looking decent for longs. Now when I'm looking at this, right, the Euro GBP, I'm thinking, okay, the Euro's got more high probability to rally than the pound, just based off taking out the Euro GBP stops. So I took the Euro long. I came back for 2R, and then market did come back down, and then it did later on take them out. So later on, it gave us a setup, and the same thing. The Euro was stronger because he still wanted those stops, and lo and behold, it's gone up there. Same thing now. We've left these clean highs in the Euro GBP. Now, if the bottom is possibly in place, and the Euro GBP is at a key high time frame level for me to long it, then I look for a break up in the Euro GBP, and then I will probably choose the Euro to long over the pound. Based off this, the Euro is going to be stronger for the Euro GBP to go up to take out these stops. So there's more chance the Euro is going to have more strength in it than the cable. And this is all taught by ICT for free anyway, so he teaches that. Didn't you want to see a GU setup at the same time? How long? I've been trading for just over 2 years. I've been trading ICT. It took me about a year to learn ICT concept to become profitable in it. But I started in early 2013 probably. But I have a bit of a nut job. I just sit at the computer all day. Like 14, 15 hours studying the charts non-stop. Is there any other questions?
Okay, looks like we're pretty much done, and we're coming up to the uh, end of time as well.
Yeah.
We'll start wrapping up here, Side.
Yep.
Just want to say a quick thanks for taking the time out of your busy 15-hour a day sitting at chart schedule.
Yeah.
You're going to
Listen,
be
I got
sitting at a
exams. I
computer
got
screen
exams next
anyway,
week as
weren't you?
well. Bloody.
Yeah,
Sorry.
yeah, be honest, you're going to be sitting at a computer screen anyway, weren't you? Yeah.
Yeah.
So, but thanks for taking the time out from your very busy schedule
Very
to
busy
sitting at
schedule.
the
You know what I
computer
mean?
screen and doing this presentation. I'm sure everyone's enjoyed the presentation and what have you. Um, Thanks as well to the crowd for taking the time out to attend. Next week we have uh, Mr. Burak Kaplan. He's on Twitter, trading channels, well-known trader and social personality. So if you go to Pure Line Forex, you can register for that event there. And so we'll call it a day here, and we'll see you all next time. Thanks for
Okay.
attending, guys.